Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views.
Hey, good morning. It's Tuesday, the 20th, September 2022. So we've got, went from green to red. We were green last night before I went to sleep and woke up this morning to a little bit of red out there in the future land. Down between 50 and 75 bips on equities. Oil and gas up a touch. Copper down a little bit, but copper still holding above that 350. I think that's an important line. 10-year yield is what's breaking hearts this morning. That is over 3.5%, I think 3.56. Last I saw that 10-year hasn't broken above that 3.5 level, I think, since it's been 11 years. So that's getting people a little concerned. Yesterday, after President Biden gave his interview on 60 Minutes, he talked about COVID being over, and we can look past that and what have you. We saw pressure on healthcare across the board yesterday. I think a lot of it was from those comments. There's only a few names that really make sense. Moderna, Pfizer being two of the biggest ones, obviously. But there are many companies that have little to do with COVID that were down yesterday and likely down again today a bit. Med device was down yesterday, which obviously makes no sense if that in fact was the reason. So you're going to get, market like this, you're going to get people to take money from their winners just because they think they have to, degrossing, what have you. So you're going to get times where really defensive areas with some growth characteristics that have held up really well, like pharmaceuticals, like some biotech, they're going to have days where they're just down 3, 4, 5% just because. But that's an opportunity, in my opinion. So you get a day like yesterday that's news driven from Biden's comments. So you got fast money guys, hedge funds, smashing the XLV, the ETFs for healthcare. That brings down the whole group just by the very nature of how the ETFs work. And that's your opportunity when they're pick out specific stocks that make sense, that shouldn't be down along with the broad group, especially something like med device when it's a COVID concern. Obviously. But that may happen again today. I don't think it's going to be as big as a disconnect as yesterday, just because it's kind of older news now, and whoever's selling now is obviously an incredibly weak player. But so for us, the names we own, Eli Lilly, Vertex, Merck, hasn't really changed the top holdings. We own the IHI and med device. We've talked about that. So again, if they smash them again with the ETF, with the XLV and what have you, it's an opportunity to pick up maybe some non-COVID related healthcare names. Going back to the COVID names, taking a look at Moderna. Moderna it's going to start to get interesting. It's just going to go straight down, it seems like here. But that's only going to last to a point. Mike Yee, who's a biotech analyst over at Jefferies, used to be at RBC when I was there. I think he does really good work. He sees value with Moderna, and he's had the right call on this thing, being cautious. But he sees value below 40 billion market cap. They've got a number of shots on goal coming up in terms of trials. The messenger RNA therapeutic looks like it's got some serious promise for multiple applications. So I think it's one to put on your radar. But again, he sees value below 40 billion market cap. This thing had a 46 billion market cap yesterday. So that's north of 10% more to the downside. Probably not a rush. You're going to probably see this thing overdo it. Markets like this, things tend to get overdone, especially to the downside. So that's going to be an accumulation name. I'll kind of come back to you on that as we get closer. But that one's on our radar. Maybe it should be on yours as well. 2:30 today Mountain Time. We're going to be doing a webinar on just market update, what's going on out there, what are our thoughts, how do we see things playing out. Tune in, 2:30 Mountain Time. You probably have an invite in your inbox. We're on LinkedIn. Webinar is on LinkedIn as well. Look us up, tune in. We'll see you then. Have a great Tuesday. Talk to you later today and talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.